Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market overview. And if you're interested in any of the services I provide, please check out the links in the description below, both the Patreon and Discord. Alright, so let's get into the market overview. So let me just unmute myself and take off the undeafen. Alright guys, thanks for stopping by if you're in the live chat, and anyone who's watching recording, thank you for checking out the video. So we are starting to record. So first, starting off with the dollar. So the dollar has been playing out pretty interestingly. It actually overshot where I thought it was gonna go to the downside. I was aiming for it to stop pretty much where we saw this bullish candle here. So at around 104.2, because I have been mapping out potentially a larger bearish structure. So a left shoulder here, a larger head, and then potentially a rise from this level to make that right shoulder as we come into this bearish fair value gap zone, or at least the top zone of this blue zone here at 108.09. Now, since we've overshot the potential neckline I was seeing here, so let me just mark that neckline right here. So we have overshot that. It's not as likely now to actually play out as a right shoulder structure on this larger bearish structure, but what we may be seeing is still a continuation down to test out this ascending trend line here. So we could be looking at a pullback back towards these bearish fair value gaps here, or back towards the blue zone. Okay, because the selling was a deeper selling than I expected. This structure is much more unlikely, and we should be looking for a pullback back towards this blue zone. So early next week, potentially on how fast or slow this rise may be, I would expect next week to be overall fairly bearish on most risk on assets. But as we come closer towards the last week of December or the first week of January, I am expecting some nice bullish movements to the upside. Okay, but be very, very careful, because the Federal Reserve, the stuff that's been coming out of there has been very, very inconsistent. Some of their data is showing that they should be slowing down on raising rates, but the way they're interpreting it, they seem like they really don't want to. So we have to watch them very closely the next time they do their FOMC. All right, quickly, let's take a look at the Dow, S&P, and NASDAQ. So Dow is playing out the path that we thought. Came into this liquidity zone here, the bearish fair value gap, tapped into it a couple of times, rejected, filled this fair value gap fully, so we take this off, and now we're coming back towards this descending trend line, the breakout trend line, and we're likely going to hit this level, trade off of it, and then start wicking and trading into these lower fair value gaps. Now, this is not a bad sign, because what we're looking for is exactly what I have drawn here from past recaps. So if you're not familiar with all these doodles, make sure to watch those recaps. Is that I'm looking for a higher low from this low here to form, so we can continue a move up to take out the liquidity above these swing highs over here. Okay, because you got to remember, the only thing that matters in markets is liquidity. A market maker needs liquidity to deliver price in one direction or the other. Okay, next is S&P. So S&P having a further retrace and came in to fully fill this bullish fair value gap, so we can actually take this off finally. And as my doodle here suggests, I'm looking for more downside, so we can take out the liquidity that's circled here under this swing low. So we want to watch the liquidity under here to get grabbed. So we want price to do exactly as drawn here, coming up and potentially making a higher low structure from here. All right, now this is all under the premise that the dollar will come up slightly and then find resistance at the zones I just showed a little earlier. Okay, if the dollar finds resistance at those blue zones or towards this higher fair value gap here, we should see the S&P, Dow, and the NASDAQ make these higher lows to have a continuation to the upside and take out their local swing highs here, the local highs here, and then attack higher highs over here. Next is the NASDAQ. So NASDAQ also coming into this fair value gap, but this is trading on top of now this descending channel it broke. I expect this to break back in as well. So look for this to break back in. The NASDAQ, because of its character, often overshoots levels both to the upside and downside. So expect the NASDAQ to take out this level here and potentially come all the way back down towards the wick and potentially even take it out, because the Nasdaq, unlike the S&P and Dow, has really overshot the upside. It has come up far more than those two percentage wise, and it's come down far less. So a good way to measure this is take a look at this. So this red trend line here, this ray, is the high prior to the COVID lockdowns. Okay, as you can see, the Nasdaq is actually nowhere near there. It never even got, it got fairly close over here, but had a good distance away. Let's take a look at the S&P. S&P was fairly close off of this low wick here. Okay, just missed it off this low wick here. And then the Dow actually traded through it, under it, making new lows on the year. So the Nasdaq is far, far, far away from actual levels to the downside that it's very likely to get to, which is sub that pivot or at that pivot zone, because a ton of liquidity is sitting over here, a ton. Okay, all right, now let's get over towards oil. So oil, oh boy, the oil chart is frightening. So if you are, if you're bullish oil, like me, it's great. But for the world, oil is actually quite a frightening chart, because if you look at it from the monthly time frame, it's extremely bullish. Okay, and then it's also now trading at a monthly bullish level here. Okay, so what's likely to happen is you're going to see this trade here for some time. And as the dollar, if it plays out the theory, the thesis I'm sharing, where it comes up slightly and then starts rolling over to break under 100 and get towards 97, you're going to see oil shoot up really hard. And what a lot of people aren't paying attention to is the demand for oil is going to increase substantially by February, because Germany's reserves are abysmal and they're going to freeze to death. So there's going to be a huge demand for oil, and OPEC has refused to increase their supply. They've either decreased it or held steady. So there's going to be a massive spike in demand, a massive supply crunch, and you're going to see oil spike towards 100 plus in a day or two. It's going to be nuts. All right, whether this happens tomorrow, whether this happens in February, doesn't matter. It's going to happen because winter's coming, and oil is not there for them to warm themselves, unfortunately. So be very careful if you're in Europe in general, but especially if you're in Germany. Their reserves are absolutely abysmal, and they're in trouble. Next is gold and silver. So gold and silver, in my opinion, are due for a pullback. I'm looking for a pullback coming ultimately towards 1600 to 1700, 1650, 1680, around there to 1700, because I do think this is ultimately more bullish. But I have penciled in a bullish pullback here. Okay, we're very extended. We had a very, very powerful breakout here, but we should see a natural pullback to grab some liquidity under these low wicks here and fill out some of these bullish fair value gaps. It's very unlikely for gold to continue higher, especially if the dollar is going to start strengthening here. So watch for this pullback, but just know it's a bullish retracement as of now, and it's very likely to continue much higher to at least attack this consolidation here and grab the liquidity that's residing here. Next is silver. Silver overshot but came into the zone. I marked these bearish fair value gaps, came into it, wicked, rejected off. Watch for silver to slightly rise and then come down lower to start testing out this bullish fair value gap, and also testing out the microphone structure it broke bullish, and also the rising wedge, if you want to call it that. Okay, I ultimately believe it's going to come down, break through, and come towards this ascending trend line. Now, depending on how fast this happens, it can be anywhere from $20 all the way to to $21, $22. It just depends on how this trades. But watch for this ascending trend line to be tested once more. Okay. All right, and then let's get into Bitcoin, and then we'll be done with the overview, and then I'll take any questions about anything. So Bitcoin's pretty interesting. So Bitcoin, actually I took some stuff off here. So it came towards this bearish fair value gap zone here, just missed it, but got fairly close. What I am seeing here is I can't be overly bearish on Bitcoin just yet in the short term. Macro, I mean, the downtrend's very clear, but short term, it's come into a support level here. So we have a support zone right where it's trading at. So this consolidation right here is where Bitcoin's trading at. So I can't be super bearish on it in the short term. I do think we're going to see some upside going into Sunday, but depending on how the futures open up Sunday night, that could dictate, how we're going to look in the beginning of the week. And if the dollar is going to strengthen out, like I think it is, we may actually see a spike down into Bitcoin. And depending on how powerful the bulls can hold these levels, okay. So ultimately, what we need to see if we're going to have any continuation to the upside is that these lows can't be taken out, and that if this low wick right here at 16,000 on the dot pretty much gets taken out, it's quickly bought back up. So it's okay if we come under 16,000, grab the liquidity under this level, and then we get quickly bought back up. That's actually a very good sign that we swept those lows, swept the liquidity, and we found fuel to try and come higher and fill out any other bearish fair value gaps that may be forming here, and then potentially try even grab any liquidity residing here and finally trading back in to this larger bearish fair value gap. But it's going to be very, very dependent on if Bitcoin can hold 16,000 on a daily time frame, and also how powerful the dollar and how fast it gets powerful will also affect this. All right, everyone. That is it for the market overview. If you have any questions on what I went over, or you have questions on anything else, you want me to look at a coin or something, just come on the mic, or you can type it out in the general chat. I'm watching that too, and I'll do my best for you. Any questions or anything like that? If not, then I just.
I don't know.
Yeah, I can. Can you check XRP? Yeah, I can check XRP. Hold on. Let's see here. Make sure, Enric, make sure to check out the crypto highlight video I did on it too, because I went a little bit more in depth. But so XRP right now is trading on this ascending trend line, which is a larger triangle consolidation. And this consolidation is actually pretty important. I actually went into detail about it in the crypto highlight video I did on it recently. Wherever it breaks, it's going to come down towards the lows or highs of this green zone. So if it breaks to the upside, it's going to come up towards about 70 to 75 cents from this triangle structure. And if it breaks to the downside, it's going to come towards 24 cents, 24 and a half cents. So this is going to be, this is pretty important. It's pretty important, but it's going to follow Bitcoin and Ethereum ultimately in the short term. So if they start breaking down, so will Ethereum. But as of right now, it's holding this level, but the probabilities of this breaking is increasing dramatically. Look how many times we've tested this level, and we failed pretty decisively off of 40 cents, that general zone. So there's a lot of power to the downside here. If I had to bet, so if I was taking bets on whether this is going to hold or not, I would say it's very likely to lose the level, and then you're going to want to look for a move down towards 25 to 24 and a half cents. And to me, that's that's an incredible place if you're looking to accumulate long term. That's an incredible place. So that's my 2 cents on XRP. Hey, yeah, what's up, brother?
Can you check out EuroCAD?
EuroCAD.
Because you were saying that oil should rise. If oil rise, cat bears should be bearish.
Okay, what a move on CAD here. All right, so EuroCAD. I mean, this is extremely extended. This is an extremely extended move here. We're coming into this consolidation. We haven't tapped above these high levels here, these high wicks. Let me just see where the nearest fair value gap is for the. It looks like it's okay. It looks like it's actually filling out or just filled this bearish fair value gap right here. and we have a smaller one right here as well. So we have a couple levels that we want to watch out for as this continues to rise. But I would be looking for a retracement fairly soon. Now this candle that closed on the daily, this is pretty indicative of a slowdown. So you may see a slight pullback or a deep pullback from here. We have to, I would say, wait until Monday. But this doji candle, if you get a bearish, or even if you get a not even a bearish engulfing, but even if you get a candle that's decisively to the downside, I would actually look to short here and then just have my stop, or at least my invalidation point above this high wick. Because if you take out that high wick, it's very likely you're coming up towards this fair value gap to grab all the liquidity above this double top here. Okay, so it's extremely likely. And if you do take out these highs, what you're going to want to look for is you're going to have a pullback, but it's going to be very likely a bullish pullback. So you're going to have a bullish retracement where it stops. Well, you can use a couple levels. You can use this level here, potentially around here, 141.7, maybe 140, maybe 1.4175, and then you'll have potentially this consolidation right here, and then you'll have these highs here. So these are going to be the levels where if it does pull back to any of these levels, it's bullish. Okay, it's still a bullish pullback. You had a change of character potentially. If you can break through, come towards this fair value gap, take out these high swings up here, and then if you have a pullback towards these levels, these will be the levels where I start looking for a continuation to try and go up higher. Okay, but you are due for a pullback very soon, if not next week. I mean, this is super extended. But with forex, trends can go on and on and on. So I would wait until you have a bearish candle, either a bearish engulfing candle or another bearish doji candle. The way that would look is if you had like a gravestone candle. So I would wait for, if let's say Monday you get like another candle kind of like this where you have a really high wick, it takes out this high, and then the body's like this essentially. Okay, that would be another sign that you're very likely gonna kind of continue down towards these levels over here. Okay.
Yeah, I was trying to sell it down to like 43.5.
You looking? Sorry, you broke up there.
Yeah, I was trying to sell it down to like 43.5, 143.5. I'm actually gonna sell right now. I got in at 145.7.
Oh, I mean, you got on at the nearly the top of that wick. Um, yeah, I mean, if you do, I mean, yeah, I mean, depending on your time frame, that's fine. That's the level you're trying to sell is right around here. That's fine. I do think it'll go lower than that, but there's nothing wrong with that. If you are comfortable with your profit there, then take your profit if it gets down to there.
If you look at the weekly candle, it's detached. If you look at the weekly candle, meaning a chart was retributed. That makes sense.
I see. Weekly's pretty extended too, but you still may get the weekly looks like potential continuation to spike above these highs because it's all about liquidity. Nothing else really matters except for liquidity. So if there's going to be liquidity here to deliver price lower, the market maker, the central bank, whoever's pushing price is going to get it there first, and then they're gonna pull down because you're going to have a ton of people, institutions, whatever you want to define them as, who will have their stops here or their buy stops where they're looking for a breakout trade. They'll get pulled in and then trapped, and they're going to deliver the price lower by closing out those positions at a loss. Wherever that level is, I mean, you can use the weekly has a lot more clear fair value gaps, bullish fair value gaps to retrace to, like right here. That's a bullish fair value gap, and that's about it. I mean, this one technically got filled, so I actually would look for this. If you're looking on the weekly, on the daily, that's right around here. I just want to see the confluence. Hold on. So right here, yeah. So it matches up with around the consolidation zones I had drawn. Yeah, I mean, if you're comfortable taking your profit there, go for it. But I think it's going to come towards at least this level over here. So 1.4156, 417 ish. And here's my, I forgot, I want to go over the small account. So hopefully everyone's aware of what I've been doing. So we start with $100. We hit the first goal of making it $200. And then we had a new goal. Let's turn the 200 into 400. We had a great trade yesterday that I closed out. So we made 157 bucks. So our wallet balance is 339. Currently in a short on Ocean, so slightly in the red there. In this second leg, unlike the first leg, I'm using Ichimoku. So every time we do a goal, I'm gonna change up the trading style. That way I can show that you can make money multiple ways in the markets. There's not really one best trading strategy. It's all about risk management, position sizing. That's really all that matters. That's how a professional trades. Like if you want to use candlesticks, that's great. Liquidity, that's great. EMAs, that's great. Ichimoku, that's great. But if your risk sucks, you're going to lose money and you'll never make money. So I just want to show that you can make money any way you want as long as you have proper risk management. And so far, we're pretty close to potentially getting to the next goal. We'll see how this trade goes. I'm willing to risk about 50 bucks here, so I'll eat away at a good chunk of the profits. But the reward is really high because I'm looking for this fair value gap down here to get filled, which that would be like another $100 ish. So I like the risk and I like the reward. We'll see how it plays out. Yeah. Any other questions from anyone? If not, I'll just end the recording here. And all right, all right.
Um,
Oh, what's up, Jamie?
one question.
Yeah.
Did you just went over euro? I got in late.
So so Euro CAD, you're in this.
No.
Oh, you missed the. Oh, okay. I was asked. Someone's short. They're in a great short actually. They're at 1.57 something. So they're actually in a pretty good profit, I think. And they were just asking me, my thoughts on where it can get to, and I just mapped out that on the daily, I see it's very likely to come down, especially after this daily candle you're seeing here. So this
No.
daily candle does give a lot of implication that a slowdown is possibly occurring from this pretty strong rise. But the weekly, so the weekly isn't showing that. This doesn't look like a topping candle on the weekly. This actually looks like a continuation candle, though it has the potential of momentum slowing down next week based off of how the candle wick closed. But we can't know that for sure. And if there is going to be more upside, the probabilities of price spiking above this level, this double top level, is very high because there's a lot of
Yeah.
liquidity there to then deliver price lower. So I just warn that if it does continue higher on Monday, you're going to want to take your profits and watch for the spike towards this smaller fair value gap. This would probably be an ideal place to open up short or add on to a short. And then I would target the weekly fair value gap level here, or these daily consolidation levels, so the red lines I posted here. So you want to target these levels down here. They have a TP around this level here, so that's fine as well. It's all about what you're comfortable with risking and what reward you're looking for, but I would be looking for a little bit lower. But overall, this is a
Love the
extremely
chart.
impulsive move. Oh, thank you. Yeah, very impulsive move. Very. But
Could you quickly go over euro dollar?
yeah, sure. So you dollar, let's do
Thank
it.
you.
You got it, brother. I'm like having a brain fart right now. I'm having a brain fart. There we go. Okay. All right.
Yeah. Yeah.
Let's see here. So euro dollar is a lot more decisive, right? So this is far more decisive. We did so we actually filled. This is actually going to probably come down significantly. Now I'm going to show you where I think it's going to come down. So look where it came to fill. So it filled out this bearish fair value gap, filled it completely, failed off of it as expected after taking out all the liquidity above this level here. And this is super important to understand. You got to remember there's going to be people, and a lot of people, whether they're institutions or individuals, doesn't matter. They're going to have their stop losses here if they went short here. And yes, there are people who leave their shorts open even after a move like this. There's institutions that do that. So there's plenty of stop losses here which act as liquidity, and there's plenty of people who will have buy stops there. So if price were to spike through that, they'll have an automatic limit to buy, and they
Yeah,
get
yeah,
trapped. So I just want to remind
yeah.
people of that. So these fair value gaps are great ways to find the targets to start attacking these levels. So you should get in the habit of attacking liquidity. So this fair value gap here got filled. We're likely going to see what? Liquidity get attacked. So where should we look? Well, start looking for fair value gaps under swing lows, under low pivots. So here's the first one you want to look out for. This one mostly got filled, but you want to remember with fair value gaps, you need a candle closure through it to be officially filled. This one's slightly still alive. Okay? Then you have a bigger one here, and this is the one I would personally target, is right
You
here.
said a daily candle.
If you're looking on the daily time frame and you find the fair value gap through there, yes. If you're
It's
looking,
daily.
yeah,
If you're looking for hour, it's for hour.
you got it. Exactly. So
Okay, thank you, Lemons.
you got it. So what I would target, if you have, again, it's going to be a longer term trade, but the risk is super easy and the reward is very good. Look for the short, depending on how Monday opens up. You can even take it if it's around this level here. Put your stop above this high wick, because if you take out this high wick, it's very likely you're going to come fill out this imbalance up here. So this higher fair value gap right here, to grab the liquidity above the swing low, the swing high, my apologies, swing high right here, and the wicks above here. So you have a very, very small risk reward here. And then you want to look to target, in my opinion, not this fair value gap, but this one down here. Because
Yeah.
I mean, this one got mostly filled, and a bunch of liquidity has pulled under this level. And let's look at how much you would actually make from this risk-wise. So if you were looking to short, and you were to pick your stop just above this high wick, so you're talking about, let's see, almost 1.5%. Going all the way down. Remember, this is this is in pips. So if you want to look to target the top of this fair value gap or the full fair value gap, that's up to you. I like the top. I like the low hanging fruit. I look for the top. So you're talking about 4% move. Pip wise, I mean, you're looking at thousands of pips, thousands and thousands of pips. So that's a
Yeah,
huge,
it's
huge
really
amount.
great.
Yeah, but could take
Yeah.
some time. But this is what I would look for. But remember as well, this is also a bullish pullback. Okay, because you have to understand it's very likely, and it doesn't mean it always plays this way, but the probability is on your side that you'll have you'll have that pullback, to potentially this level or this level, and maybe even lower. Okay, you could have the pullback to this fair value gap right down here. Okay, but you're very likely to make a higher low from these lows down here. Okay, the probabilities are on the side of that because you took out all of this and this. All right. So character is showing a potential of changing here, and look how this looks. You have the head, you have the right shoulder, and whoa, you have a left shoulder potentially over here. So it's like there's a lot of potential for a larger bottoming structure. So you're shorting a bottoming structure that's forming. So if you can recognize that, what can you do to take advantage? Well, if you short it down and you think this might be a higher low, there's nothing stopping you from longing here and having your invalidation point down here. And this is how
Yeah.
you make massive amounts of money, when you can start recognizing market structure as it's forming. That's the differentiator between a retail trader who's a novice and then a professional retail trader. Okay? Anyone else
Yeah.
have any other questions? Any other charts you want me to look at, or just in general questions?
I have another brief one.
Yeah.
If you have, like, you gave the technicals on euro dollar, do you have any input from the fundamentals, like right now, because this chart looks really good.
Oh no, I mean, I will say I am a little. I'm actually more uncertain than I have been on the dollar in a long time. So this whole year, I will say I thought I've had a very good grasp on what I thought the
Yeah.
dollar was going to do, and since I would say since the start of December, I've found myself actually more unsure than I have been in a long time. And whenever I've come across myself, feeling this way about an asset or anything, I found the best thing to do is really do nothing, right? To do the least amount. So as of now, I'm just observing. I still believe the dollar is going to rise short term, but will find some major rejections around this zone over here and then plummet and finally break this ascending trend line to then come and visit this level down here. Now, in that scenario, we should see all the pairs against the dollar go up. All right.
Yeah.
But short term, all the pairs against the dollar should go down if my thesis is right of this break towards at least this bearish fair value gap or this blue zone. But ultimately, that would then kind of match up with what we're seeing with the Euro USD, right? Because we're likely going to see Euro USD go down because the dollar's showing short term strength. But if
Yeah.
we're going to see longer term downside on the dollar, then this bottoming structure makes a lot of sense because then the euro is going to get stronger against the dollar and break out, right? So that's this kind of coincides with my current thesis. That's why I'm actually pretty confident something like this might happen, but I'm very unsure because if the Fed were to come out, let's say January, and say, hey, we're going to do 0.25 basis points, like they come out super dovish, the dollar could plummet under 90. And then the whole landscape of all the markets start to change. So you have to be ready to be wrong, and I can definitely be wrong.
Yeah, of course.
So, but this is what I'm seeing for now. But my opinions will change coming into January for sure.
Have you ever been 100% certain of setup?
Never.
I, I think no.
Never.
Right.
Yeah,
Something like that. Yeah, yeah.
that's perfect. You're completely right. Yeah, I never have, so I shouldn't expect to be now.
Yeah.
Any
Love yours here. Thank you.
you got it. Anyone else have any questions? Remember, you don't have to come on the mic if you don't want. You can always type it out like Enric did. Um, I'm willing to look at anything. If not, that's okay because I'll just end the recording. And if you missed the beginning, don't worry. The video will be up a little bit later today. And I mostly just
Are
go
you
over
only
the stuff.
looking at Forex?
No, I went over a couple stuff. I actually, Enric asked me about XRP. I looked at that. And then the beginning of the recording here, I went over, the dollar, the U.S. stock market, oil, gold, silver,
Okay.
yeah,
Yeah.
and Bitcoin. I also
Okay.
went over Bitcoin.
Okay.
All right. I guess that's it. Thank you guys for stopping by, and thank you to you who is watching the recording. Remember, if you have any questions, make sure to ask me via in the comments of the YouTube video or in the Discord. The Discord's the easiest way to get in contact with me, so make sure to join the Discord. And remember, everyone, be patient, be vigilant, and be nimble. I love you guys. Take care.